Hello, I'm Dominic Frisby and you're watching FinancialTrader.tv. Today we've got self-made multi-millionaire trader and investor Vince Stanzione with us. He's the author of Making Money from Financial Spread Trading, the best-selling course on the topic. And you may have heard of Vince before. He's been featured in over 200 publications and websites, including The Times, The Telegraph, The Investor's Chronicle and The New York Times. Some of his market calls, like when he said the Dow would hit 14,200 and Italian stocks would rebound 30%, were laughed at when he made them, but both happened exactly the way he said. He's got students in 109 countries and his live seminars usually sell out within 48 hours. Over the years, he's attracted guest speakers like Jim Rogers, former hedge fund partner of George Soros in the Quantum Fund, and Dr. Mark Farber. So, Vince, an impressive background, an impressive record. How much experience would you say you need if you want to start out trading? I mean, you know, how much do you need to know?
Okay, great to be here, Dominic. I think we can all basically spend too much time practicing and trying to be perfect. The truth is we've got to start somewhere. At the same time, it would be foolish just to rush into financial trading with no training or experience. What I do in my package basically is a home study course, so you can go at your own pace. You don't have to go and attend classes or night school or anything like that. But typically my students take about 30 days to go through the package. And then once they've gone through that, then they can basically start practice trading, just like virtual accounts with sort of small, no money down, or then just start trading with very small amounts and build up. So it's not a case of, just rushing in and doing it all in one go. Okay,
so with your course, you can go at your own speed,
exactly,
so to speak.
Yeah.
And what about the risks? How much can you lose?
Yeah, very good question. Now, some of you may have heard of horrendous stories about your Uncle Bert that's been trading soybeans or coffee or what have you. With financial spread betting, everything can be done with something called a guaranteed stop loss. So the maximum risk is always known. But like I said, before you even start with any real money, just start off with a virtual account and take an amount of money that you can, it's a horrible term, but afford to lose, but an amount that you can risk. So let's say £2,000. And what you do with that £2,000, you divide it up into units. So say £100 or £150, and you don't lose more than a certain percentage on any one trade.
Okay. Now, let's say you're spread betting something like gold or silver, and which has been very volatile over the last couple of weeks, and the market gaps down, and you've got a guaranteed stop loss, which is above where the market gapped down. Does your stop loss trigger at the gap down point, or does it trigger at the point where it was supposed to be guaranteed?
Right, the whole point of a guaranteed stop loss is exactly that. It's guaranteed. So even though the market gapped, you still get out at exactly that price, even if it didn't trade at that price that the financial bookmaker gave you. That's why you pay a premium, Dominic, because a guaranteed stop loss, and a good way to think of it, it's like an insurance policy, because normally you pay a few extra points spread for that. So they will take you out at exactly the price that was agreed.
Now, if I'm right in saying you've been in this game for 15 or 20 years and you've consistently made money, how have you done that?
Okay, the main difference between me and a lot of people that run funds and what have you are what are called long only. So they're good when the market's going up, they can make money. The difference with me, I don't care whether the market's going up or down. I don't get stuck into one market. I trade currencies, commodities, stocks, predominantly US stocks, but I also short trade as well. And for people that don't understand that, say for instance 2008, 2009, when all the banks were going down, things like Northern Rock, Lehman, Bear Stearns, I was betting those stocks to go down. So as they went down, I was profiting. So the main reason why I've had consistent results year after year after year is I don't particularly just trade one market, and I don't only trade in one direction. And I'm happy to change views. For instance, I was very long and bullish on gold for about 10 years, and then the last few years I haven't been so bullish on gold, but now I've been more bullish on the stock market.
Okay, very good. Now, we've got a crisis going on in Europe. There's a lot of financial volatility. Nobody quite knows what's going to happen next. The economy's in recession. I mean, is now a good time to start doing this kind of thing?
But Dominic, isn't there always a crisis going on? You know, you name me a time when there isn't a crisis going on. There's bird flu, there's Cyprus, there's Greece, and you know what happens? It's funny, there's banking crisis, and then it cycles back over again. With these crises also come opportunities, because remember, money doesn't just disappear or flow down the back of the sofa. It goes from one hand to another, or one market to another. So say, for instance, if stocks are going down, gold may be going up. If the euro is weak, well, the US dollar is going up. So there's always something going on in markets. So don't be afraid of crises. Like I said, 2008, 2009, which if you flicked on the TV, it was all the headlines of, you know, Lehman, Bear Stearns going broke. They were very, very good years for me. So, you know, embrace volatility.
Now, I know there's a lot of people of say, maybe the 60-plus generation who aren't that computer literate, but they're certainly very interested in trading. How computer literate do you need to be? And in fact, how good at maths do you need to be?
Good question. Right, the first one, let's do the one about maths. I always get people saying, oh, I'm not a maths whiz. Well, the truth is now with computers and what have you, you don't have to be, you know, simple calculator. There's also lots of little things in the system now that stop you making mistakes. Let's say, for instance, you go onto one of the financial bookmakers and you decide to do £2,500 a point by mistake, and you only meant to do £20 a point. Well, the system will stop you doing that. It will say, look, you don't have enough cash to do that. So there's many things that are built in that stop you if you are going to make a mistake. So you don't have to be a maths whiz. Basic arithmetic's fine. As for computers, they've got much easier. You know, now we see with the iPad and apps and what have you, the days of where you had to know how to write software or code, they've gone now. There's programs like ShareScope, which is fantastic, and all the various websites. So it's got much simpler, and you know, if you look at computers now, they don't crash anywhere near as much as they used to, you know, a few years ago. So it has got easier.
Okay, now a lot of people are quite frustrated with their financial advisor, or perhaps they've had a newsletter writer that told them he could beat the markets, and then that newsletter writer didn't beat the markets. You know, what separates you from the crowd of you know, the other financial advisors, the other newsletter writers?
Well, the thing with me, I give people the responsibility themselves, and I think we've got to start taking responsibility about our own money, Dominic, because if you think about it, who cares the most about your money? You do. Yeah? Nobody cares more about your money than you do. If you give your money to some fund manager and he loses it, well, he'll say, oh, sorry, old chap. You know, the end of the day, he normally doesn't lose his job. Okay, he might lose a few fees or what have you, but you're the one that loses money. So you need to take responsibility for your own money. And what I do with the package is basically give you the tools to put you in control. So the days of you taking your money and giving it all to some fund manager or whatever, you know, that's crazy. You need to be in control of managing, you know, your own money and using these tools that allows it. So I'm not saying give your money to me. What I'm saying is, look, this is how I've made my wealth. These are the tools that I've used, and you can also do the same.
Okay, now what's the most common mistake that rookies make when they're starting out trading and investing?
Overtrade, Dominic. The biggest mistake is they might get a few winning trades, or even if they get a few losing trades, and then they want to catch up, but they take too much risk for the amount of money they have, or they trade markets which are the most volatile markets because they sound exciting. And what happens is they might have the right idea. Say, for instance, they think gold's going to go up. That's a good example. But because they don't have enough money to back that position, they get taken out of the market, and then they see the market soar, but they haven't got a position anymore. So my advice is listen, trade smaller than you basically want to, especially at the start. It's better to have a smaller trade with a larger stop, which gives you more chance basically to be in a market. Then, you know, you put everything you've got on one lucky trade because, you know, you want to win the lottery. That's not the way it works, but that's what a lot of rookies basically do.
Okay, very good. Now, I want to learn a bit more about your system. What does your system entail? Okay,
well, basically, as you probably know, or some people might know, there's different ways to trade any market. There's a fundamentals, and fundamentals are things like the news, earnings, and then there's something called technical. Now, I'm not overly into one or the other, but probably the way that I trade, which is called trend trading, is a system which works on price. So at the end of the day, what we do, what we're thinking, we're saying, look, we don't care about the news, we don't care about what Fred Blogg says, what a newsletter writer says. What we care about is the price. So if the price is going from 20, 30, 40, 50, 60, that's an uptrend. And same again, if it's doing the opposite, it's going down. So we use the price and we let the price tell us what's going on, rather than what we think should happen or what our beliefs are. So my system is basically based on price.
It's a trend following system.
It's a trend following system.
Very good.
Yeah.
Now, you're kind of well known for spread betting, and if I'm right in saying, in the US, I don't think they actually can spread bet.
Right.
So how can people use your systems if spread betting isn't available to them?
Spread betting is mainly used in the UK, and the reason why it's used in the UK because it's tax-free. Because if you have a bet on a financial market, then betting doesn't come under a capital gains. Now, in Europe, they tend to use contracts for difference, or CFDs, which are very similar to spread bets, but the taxes are different. Also, Australia, Singapore and South Africa, CFDs, and they tend to be offered by the same companies that offer spread bets. In the US, you're absolutely right, you can't use financial spread betting, but I have a different course for the US called Maximum Trading Profits in Minimum Time. The systems and the training are basically the same, but in America they use futures, options, exchange traded funds, or just regular buying and selling shares. So you can still use this system in the States, but you're right, we don't use financial spread betting.
Okay, very good. So you're selling this package, making money from financial spread trading. Tell us what's in the package and how we can find out more about it.
I don't know about you, but I still like something pen and paper or hard. So what we do, and we find a lot of our customers, they still basically like to have something in ink. So what you get the actual printed workbook. You also get all the slides which I use in the DVDs, and there's 2.5 hours which are on DVD, which you can watch on your computer or DVD, or it doesn't matter if you've got a Mac or a PC. I also include a copy of my book, The Millionaire Dropout, which is a new book which has just come out as well. And this we actually, we send to you physically. It's not a download, so you don't have to sit there hours waiting for your DVD to download. We send that into you, via courier.
Is there an electronic copy you can have as well?
There are some items which are electronic, but what you also get is a website, access to a website, and you also get access to me, basically for support, because that's very important, Dominic. It's all very well saying, here you go, take the package, take it home with you, but if there's no support at the end of it, that's where a lot of people fail. Another thing, what you said about where rookies don't particularly do very well, is because they don't always have the support. And they've got nobody who they can ask a question to. So the support is, I think, one of the things why I have such a good reputation. I come back to people and help them.
Oh, okay, very good. So that will be very helpful. So, I mean, they can contact you and say, what do you think about this? How do I deal with this situation?
Not necessarily, tips as such, but maybe they've read something and they're not sure of it and they just want to check it over.
Okay.
And that makes a big difference.
Very good. Well, Vince Stanzione, thank you very much, and
thank you.
I'm sure all of us are interested to find out more. And if you do want to find out more about trading financial markets, you can visit fintrader.net. That website again is fintrader.net, and there you'll find more information on Vince, and you can download his report, 10 Tips the Professionals Don't Tell You, for free. That's it for now. We'll see you next time.